It is January 2026. While the American media is distracted by the latest tech earnings or the Fed's next quarter-point shuffle, a silent but brutal civil war is breaking out 3,000 miles away. It's a war that doesn't involve tanks or drones, but something far more powerful: the control of the second most important currency on Earth. We are talking about the European Central Bank. For decades, the money printer of Europe has been the exclusive playground of the old guard: Germany, France, Italy, the Netherlands. They set the rates, they print the cash, and they decide the economic fate of 350 million people. But right now, the tectonic plates are shifting. For the first time in history, the Iron Curtain of economics is being ripped down. A bloc of Eastern European nations, former communist states that have clawed their way into the free market, are mounting their most aggressive campaign ever to seize a top seat at the ECB. They want the Vice Presidency. And they want it now. You might be sitting in Chicago, Toronto, or London thinking, why should I care about a bureaucrat from Croatia or Estonia? Here is the reality check: the euro makes up nearly 60% of the movement in the US dollar index. If there is a power struggle in Frankfurt, the volatility hits your 401k. It hits the earnings of Apple, Tesla, and Coca-Cola. It changes the price of the imports on your shelf. The East is tired of being the cheap labor of Europe. They want their hands on the steering wheel. And if they get it, or if the West blocks them and causes a diplomatic fracture, the stability of the global financial system is on the line. I'm Boss, and today we are peeling back the layers of the Eurozone's biggest leadership crisis in 20 years. This is the story of the Eastern Uprising, and what it means for your money. To understand why this fight is so vicious, you have to understand how the game is rigged. Imagine if the US Federal Reserve was run almost entirely by New York and California, while Texas and Florida were told to sit in the hallway and just follow orders. That is, effectively, how the European Central Bank has operated since its inception. The ECB Executive Board is the holy of holies. It has 6 members. These are the people who actually run the show, day to day. They prepare the decisions that move markets. Since the euro was born, the Big Four, Germany, France, Italy, and Spain, have treated these seats like their birthright. But the Europe of 2026 is not the Europe of 1999. We are now 2 years past the accession of Bulgaria into the Eurozone. We have 7 nations from the Eastern Wing: Estonia, Latvia, Lithuania, Slovakia, Slovenia, Croatia, and Bulgaria using the euro. These nations aren't just satellites anymore. They are the new engines of growth. While Germany's manufacturing sector has been gasping for air, crippled by energy transitions and legacy costs, economies like Poland and the Baltic states have been sprinting. They've digitized their economies, they've deregulated, and they've modernized faster than the West cares to admit. And yet, when you look at the top brass in Frankfurt, the East is invisible. Now, the Vice Presidency is opening up. Luis de Guindos is packing his bags in May. This is the catalyst. The Eastern Bloc sees this not just as a job opening, but as a test of whether the European Union is actually a union or just a hierarchy where the rich countries dictate terms to the poor ones. The candidates are lining up. We've got contenders from Estonia, Latvia, and Croatia. They are hungry, they are qualified, and they are demanding a seat at the table. But the old Europe isn't going to let go without a fight. And this brings us to the first major friction point that Wall Street algorithms are beginning to price in: policy divergence. See, the economic reality in Tallinn, Estonia, is very different from Paris, France. Eastern Europe typically runs hotter inflation. They grow faster. They often need tighter money, higher interest rates. Western Europe is aging, slower, and addicted to cheap debt. If you put an Eastern hawk in the Vice Presidency, you change the chemistry of the room. You introduce a voice that might say, no, we shouldn't bail out the bond markets again. And that is a terrifying prospect for the highly indebted nations of the South, like Italy. Let's look at the players on this chessboard, because who wins this seat will determine the flavor of European monetary policy for the next 8 years. The Eastern frontrunner, Boris Vujcic, is the current governor of the Croatian National Bank. He is being framed as the lead contender for the East. Why? Because he's a survivor. He steered Croatia into the Eurozone. He's seen as competent, modern, and perhaps the best shot the region has at unifying their support. The Baltic hawks, Martins Kazaks and mighty smaller, these guys are the hardliners. The Baltics are famously fiscally conservative. They hate debt. They hate printing money. They look at the balance sheets of Southern Europe with horror. If one of them gets the VP slot, it signals a massive shift toward sound money. For US investors, this would mean a stronger euro and a weaker dollar, as the ECB stops diluting its currency. The Western Goliath, Olli Rehn, but here is the obstacle. Olli Rehn, the head of the Finnish Central Bank. He's a former European commissioner. He is the definition of the establishment. He is safe, he is predictable, and he is a known quantity to Wall Street. And then there's Mario Centeno from Portugal, representing the Southern Bloc. The Western argument is brutal but mathematically sound: GDP weight. The 7 Eastern Euro nations combined make up less than 4% of the Eurozone's GDP. Germany, France, Italy, and Spain combined? Over 70%. The West is saying, why should the 4% dictate policy for the 70%? The East is saying, because this is a democracy of nations, not a corporation of shareholders. And we have been locked out for 20 years. This is where the wallet connection comes in for you. When the ECB fights, the markets tremble. If the selection process turns into a mudslinging contest, or if the East is snubbed and decides to block other EU initiatives in retaliation, we get gridlock. Markets hate gridlock. Remember the Greek debt crisis of 2010 to 2012? That started as a small localized issue. It ended up tanking the US stock market by 20% because investors realized the European project was fragile. We are seeing cracks in the foundation again. Now, I need to play devil's advocate. There is a reason the West is hesitant, and it's not just snobbery. It's risk management. If you are a US investor putting capital into European banks, you need to trust the regulators. And unfortunately, the Eastern frontier has a history that makes compliance officers in New York sweat. During the 2010s, the Baltic states were practically a laundromat for Russian money. We saw massive scandals involving billions of dollars funneling out of Moscow, through Estonia and Latvia, and into the West. We saw the collapse of ABLV Bank in Latvia. We saw the bribery conviction of Latvia's central bank governor. We saw Slovakia's governor dragged into corruption charges. This is the dirty laundry the West uses as a shield. They argue, how can we put someone from this region in charge of the ECB's executive board when their banking systems were recently compromised by money laundering? However, the East argues that they have cleaned house. They've implemented some of the strictest AML laws in the world because of those scandals. They argue that the current crop of leaders, people like Vucic and Kaja Kallas, are part of the solution, not the problem. But for Wall Street, perception is reality. If an Eastern candidate wins, you can expect a short-term sell-off in European bank stocks as the market digests the risk premium of an Eastern regulator. Conversely, if the West installs another safe-hands candidate like Olli Rehn, the market will likely yawn and continue business as usual. But, and this is a big but, that kicks the can down the road. The political resentment will grow. Let's get technical for a moment, because this is where the money is made or lost. The fundamental flaw of the euro is that it applies one interest rate to 21 different countries. Right now, Germany is flirting with recession. They need low rates to stimulate their factories. But countries like Croatia and Slovakia are often booming, dealing with higher wage growth and higher inflation. They need high rates to cool things down. If the ECB is dominated by the West, they set rates to help Germany. This overheats the East, causing bubbles in Eastern real estate and wages. If the East gets more power, they might push for a hawkish stance to prove their credibility and fight their local inflation. Why does this matter to the S&P 500? If the ECB becomes more hawkish under Eastern influence. 1. The euro rises, the euro gets stronger against the dollar. 2. The dollar falls, a weaker dollar is actually good for US multinational stocks. About 40% of S&P 500 revenue comes from overseas. If the euro is strong, Apple sells iPhones in France, converts those euros back to dollars, and shows a bigger profit. 3. US exports, American goods become cheaper for Europeans to buy. Good for Caterpillar, good for Boeing. However, if the West blocks the East and installs a dove. 1. The euro weakens, the dollar surges. 2. US earnings crunch, suddenly, Microsoft and Google see their European revenues shrink when converted back to dollars. This creates an earnings recession for US tech. This appointment is not just a HR decision. It is a signal of where the euro/dollar exchange rate is heading for 2026 and 2027. We are already seeing Eastern officials holding high positions elsewhere, Kristalina Georgieva at the IMF, Valdis Dombrovskis at the European Commission. They have proven they can play at the global level. The ECB is the final fortress to breach. So, how does this play out over the next few weeks and months? As a financial analyst, I see 3 distinct scenarios. You need to prepare your portfolio for each. Scenario 1, the Western Wall holds. What happens? The big economies muscle Olli Rehn or Mario Centeno into the VP seat. They offer the East a consolation prize, maybe a minor committee headship. Market reaction, the euro trends lower. The dollar strengthens. Stability is maintained in the short term, but political fragmentation increases. The East becomes an obstructionist bloc in the EU Parliament, making it harder to pass budgets. Investor move, long the US dollar. Short European banks. Scenario 2, the Eastern breakthrough. What happens? Boris Vucic or another compromise candidate from the East wins the seat. Market reaction, initial volatility. Wall Street algorithms might panic sell European assets due to uncertainty. However, once the dust settles, we likely see a more hawkish ECB. Investor move, this is the contrarian trade. If the euro spikes, you want to be heavy in US exporters and emerging markets that benefit from a falling dollar. Scenario 3, the nightmare gridlock. What happens? No consensus is reached. The appointment is delayed. Negotiations turn toxic. Eastern nations threaten to veto other EU business. Market reaction, this is the Black Swan. Confidence in the Eurozone governance evaporates. Bond spreads widen, meaning it becomes much more expensive for Italy to borrow money compared to Germany. We could see a mini repeat of the 2011 sovereign debt crisis. Investor move, flight to safety. Gold. Bitcoin. US Treasuries. Get out of European equities immediately. Here is my take. The European Union is at an inflection point. You cannot keep expanding the club, adding Bulgaria, looking at other Balkan states, while keeping the boardroom locked for the original founders. Atanas Pekanov, the former deputy PM of Bulgaria, put it best: every country has the same vote. It makes sense to think that needs to be some balance. But finance is rarely about fairness. It is about leverage. The East has leverage right now because of Russia. The war in Ukraine has shifted the geopolitical center of gravity. Poland and the Baltics are now the front line of NATO. They are the security guarantors of Europe. They are spending massive amounts on defense. You cannot ask these nations to hold the line against Putin's aggression while treating them like children at the central bank. The political capital of the East is at an all-time high. If the West ignores this, they risk fracturing the very unity that has kept Europe together through the war. I believe we will see a compromise. I predict an Eastern candidate will eventually take a seat on the executive board, perhaps not the VP spot immediately, but certainly one of the vacancies coming up by the end of 2027. The pressure is simply too high to ignore. But until that handshake happens, expect turbulence.